Welcome, everybody, to another episode of the Me Plus Ultra Network. This is where we help business leaders and entrepreneurs take their businesses and their lives to the next level. I'm your host, Scott Joseph, and today we're going to dive deep into one of the most important topics for business leaders, and that's tax-efficient wealth building. Joining us is a good friend. He's become a good friend. He's a good example of business relationship first and then friendship after, which somewhat makes me question my own judgment. I don't know. So, but financial expert Claudio Gambin, he is a sought after advisor. He was actually referred to me by another friend, Scott Simons, and since then that this relationship has really taken off. But he specializes in helping business leaders identify the hidden opportunities to accumulate wealth while minimizing their tax liability. So if you're asking yourself, why should you tune in? Listen, there's not a call I don't take from Claudio where I don't ask myself, why am I taking this call?
Yeah, I was just wondering. You missed 9 out of 10 calls.
Well, I'll tell you this. You want to stick around. If you want to expand your wealth, if you want to ensure a prosperous future for you and your business, listen, I've recommended him to a lot of different people. A lot of people within Me Plus Ultra community uses his services. I can vouch for that. He's protective of all his clients. He doesn't like to sit there and say who's with him and who's not, but I can tell you. And so, and everybody's extremely happy. So let's jump in. Claudio, welcome to Me Plus Ultra Network.
Thanks, man. I'm so happy to be here. I know we had to reschedule.
You're not happy.
I am happy. You know, I don't say yes to these very often.
No, you don't.
And I actually said no to this, but you forced me. So here we are.
No, that's not true. If I have to sometimes mute you and on your phone or somehow, filter out all the text messages. Hey, when can I be on your show? When can I get on your show? Yeah. But hey, congratulations.
Thank you.
Thank you. Fourth, right? Fourth baby?
Fourth baby.
Well, they're not all babies now. You got one baby now. First son, though.
First son. Yeah.
Man. You did it in reverse of me. I went son first, so then 3 girls.
Yeah, no, he's so chill. It's awesome. As a matter of fact, I'm looking forward to next week because I'm bringing up a bottle of Weller so we can crack it open and have a drink.
Very nice. Mm-hmm. Listen, you'll never have to ask me twice on the Weller stuff. It's my favorite one.
Your son really helped me find some really cool. So for those of you that don't know, we named him Weller, which is just an absolutely fantastic name, but I am biased. And your son helped me find some really cool bottles, man. We picked up some real antique stuff, and I've never spent so much money on bourbon in my entire life, but now we have a collection.
Well, Claudio also set me up for my homeowner's insurance and a lot of others insurance, which we'll get into. But I will tell you this. I think I might have been one of their first people that said, listen, I've got to insure my bourbon collection. Mm-hmm. And then I didn't realize how much I actually had until they asked me, well, what's its value? And I had to start putting it together. I was like, well, holy crap. I've really, it's not a smart.
You just kind of pick it up, right? Like it just kind of happens. You just buy a bottle here, buy 10 bottles there. It just kind of happens.
It's not a great investment because I drink it. So it's, so, all right. So let's get down to business here. First, for the people who don't know you, give us some of the milestones, right, along your career that got you where you're at now. So then we'll get going.
Yeah, let's do it. So let's talk about it. I started in the financial services world 2009, right? Like I graduated college. The world was like coming to an end. Nobody was hiring. So I started in financial services because that's what you do when no one's hiring you, right? You become a financial advisor. And, you know, it was truly a blessing because I found my calling and the type of work that was. And I was with a pretty large broker dealer for 10 years and found a ton of success there. But, you know, Scott, there comes a point in your career, and thankfully for me, this happened relatively early on, where you recognize that you're going to be doing this for the rest of your life. And if you're going to do this for the rest of your life, you might as well have some fun. So I had a coach at the time, and he was like, "Hey, Claudio, who do you have the most amount of fun working with? Like, who are the clients that, like, if they call, you pick up? Not like Scott, but like if they call, you pick up, right?"
I gotta be. Listen. If I had $1, I could retire. If I had $1 for every time I had a business partner say this and then always list me first, I don't know. I mean, I could retire tomorrow.
So I did a study on my client base, and the people that I love working with the most were business owners. And I think the reason that is because I was a business owner. I had invested in a couple of different businesses that were doing relatively well. I like that human. I like that brain. I like how they operate. So when I sold my business in 2019, because I no longer wanted to be what you would consider as a traditional financial advisor, I no longer wanted to be giving financial advice, hoping that the client would invest money with me. Okay. I wanted to build something that was totally different. And I wanted to build an organization that operated with as least amount of bias as possible, operated with the client's true best interest. And whenever you're selling a product, there's nothing wrong with it, but whenever you're selling a product, you ultimately have some level of bias, right? Yeah. So that's where we're at today. And and I say we, the firm, we charge a flat fee for our work. That's how we make money. We deliver financial advice. And today, the level of advice we give is really centered on three big things. Making sure you're protected. Like, as business owners, we take risk inherently. It's just a byproduct of our lives. So I want to make sure that you're protected. No matter what happens, no one can take what you've built. That's first and foremost. Number two is taxes. The less you pay in taxes, the more good you can do. Like, our clients, I truly believe, are the backbone of the American economy. They're the small to medium-sized businesses, to where if I save them money on taxes, they're not buying a second house in Aspen. They're reinvesting into their business. They're hiring more people. They're just doing more good. So protect, save money in taxes, and grow. Those are the three things we do. So, like, when we talk through this with clients, that here's where you're at today, here's where you want to be. Let's reverse engineer this thing to figure out where you want your life and business to be, so that you actually have the best possible shot of achieving your dreams. Not just with a hope, but with a calculated game plan.
I've always described you as, well, we won't say that on the air, but in business settings, when people ask what you do, like before meeting you, I felt like, all right, you know, I had a wealth manager, but I think that term is used loosely, because really he was just a glorified he was just a broker.
Yeah, you're a wealth babysitter.
Correct. And so I had all this stuff going on, and I felt like I didn't have a grasp of all of it, right? Like, I had this, I did this, I knew about it, right? And of course you got your personal financial statements and all that type of stuff, so it's there, but I knew it wasn't being optimized. I knew it wasn't all, like, the right hand didn't know what the left hand was doing, basically. And so what I like about you is you kind of just made sense and make it all work together and optimize it out. So let's talk a little bit. What are some of the most common mistakes that you think business leaders make when it comes to planning with their taxes?
Well, I mean, if we want to go straight into taxes, the most common mistake is waiting too long. By the time January 1 rolls around, it's too late. Like, your tax strategy, like, how often did we talk in Q4 of last year, Scott, about your taxes due this year? I mean, I felt like we were on the phone every other day. And
and by the way, that's too late, right? But I had a lot of stuff going on at the end of the year that I was like, oh crap, what's going on?
So October 1 is our firm's deadline for taxes. Like our client's tax plan needs to be fully implemented by October 1, and or there needs to be a very specific reason why it's not. Like, so if a client has a transaction happening or a big deal popping in Q4, we need to know what we're doing and how we're doing it. Because if you don't do it in the year that it needs to be done, it's too late. So if a client calls me today and says, hey, Claudio, I've got a $300,000 tax bill for last year, I go, there's probably not a lot that I can do because we weren't working last year. So that's the number one mistake people make. And honestly, it's not even their fault. It's their CPA's fault. Their CPA should know better. But let's just kind of bust a myth really quick. CPAs are not designed to save you money on taxes. So if you get mad at your CPA because they're not saving you enough money on taxes, or you get mad at your CPA because you're paying too much in taxes, you're mad at the wrong person. That's not your CPA's job. Your CPA's job is to file your taxes. You need to hire a strategist to develop the strategies to deliver to your CPA so that they can do it and they can file your taxes. CPAs are not built, they're not designed to be the strategy. They're designed to prepare and file. Period. So like, if you're paying too much in taxes, but you don't have someone thinking strategically around your tax liability, you just don't have the right player on the team.
Yeah. Let me ask you, what's the best way for business leaders to identify some of the hidden opportunities when it comes to reducing taxes?
So business owners need to be operating, and again, just as a quick calculation, at around 18 to 20% effective tax rate. That's the right place to be, or less, depending on the situation, but definitely not more, right? Federal, not state. So if you make $1 million a year and you're paying $200,000, you're there, right? You're doing it. Something's going right. Net million, not gross million, right?
Yeah.
So that's just a basic first litmus test. Like if you're paying anything 20, 200, 25%, 30%, 35%, there's 1,000% room there for you to do something more unique. And the other mistake is, Scott, most people think tax strategy equals risk. I cannot tell you how many times I get on the phone with somebody and they're like, oh, I just don't want to get audited.
Yeah.
Right. Cool. Tax strategy does not equal risk because the rules are very clear, right? Like there's a code book. It tells us what the rules are. Play by the rules and you won't get in trouble. So it's plain. It's super.
The problem is it's too thick.
Yeah. Most of us can read.
Yeah.
Sorry, it's not a skill common amongst us.
So, I guess one of the things, and I brought up the insurance earlier.
Yeah.
How does that play a role in terms of the strategies?
So, insurance in general can be used in tremendous different ways. But the bigger picture, Scott, is
because I think a lot of people hear insurance and they think something they have to do because they have to be insured, right? And they're not thinking of it as an actual wealth building tool.
You're also in a very unique situation, right? I would say if out of 10 clients, 3 clients, we use insurance, 7 we don't, right? So it's definitely not a common thing. Because let's just debunk the myth here. For another myth here, life insurance is a good investment. Most of the time, it's a really awful investment. And the reason it's a really awful investment is because most of the time, and again, I can't really deliver advice here. I'm just taking generalities. Most of the time, the commission's too high, the cost of insurance is too high, and the only person making money in that whole deal is the agent, not the client. Most of the time, the advisor is incentivized to only sell life insurance. So if the solve to every problem is a life insurance sale, you're probably talking to the wrong person. But if done correctly in the right scale and the right setting, it can become an incredible tool. The problem is those tools don't become available until you're spending $100,000, $200,000, $300,000 a year, right? And so it just automatically disqualifies most people. But to take a step back, the bigger picture is alignment. The bigger thing we're trying to solve for, Scott, is alignment. And what I mean by that is when we think through wealth management and strategy, Most business owners, okay, their number one and best investment, where they should be putting all of their money, is life insurance. No, I'm just kidding. Where they should be putting all of their money is their business, right? Like if you think through your businesses, they're your best investments. They generate the best ROI, right? They're typically the safest because you know it, you understand it. Unfortunately, most financial advisors are going to give advice that is completely contradictory to that, where they're going to come in, they're going to say, "Hey, Scott, I think you should invest in the S&P 500, or I think you should invest in this stock or that bond or this or that."
Yeah.
But those positions are never going to be able to compete with what you can do in your business. So the alignment's just not there, right? So what we do when we get involved is you say, "Hey, Scott, like where do you want to be in 10 years? Where do you want to be in 5 years? What is your goal? Do you want to buy real estate? Do you like real estate? Do you need cash flow? Like what does this look like? And how do we squeeze as much juice out of the business before we go put money anywhere else?"
Let me ask you a question. Would you say most of your clients are in growth mode or
Growth mode.
I was going to say protect what I have mode, right? Because I think the older you get, then all of a sudden it's
Yeah.
like, all right, now I got to make sure.
As a matter of fact, our ideal client is a business owner in a stage 2 growth oriented business. That's the brain.
So,
That's the brain I like to deal with.
so for the growth people, then, and I would say most of the people in our group are in growth mode, which is why they're in the group, right? And so, gosh, when I think about my network and the relationships I have out there, I would say most are in growth mode as well. Um, but what should they focus on to make sure that they're building wealth efficiently? So we got their business, right? I get that. Maximize your business and this and that. And I think everybody wants to do that. But outside of that, what should they be doing?
But again, sorry to be boring here, but outside of that, is they should stay.
I'm used to you. I'm used to you being boring. Don't worry about it.
Listen,
I'll make up for it.
That's how we've been successful. They need to stay liquid. Like if the business does not need any more capital, anything else you do outside of the business, make sure it's liquid. Because inevitably, the business will need liquidity, whether it's through opportunities or threats. And if your money is tied up in other places, right? So you got to create different layers here. You got the business, which is the castle.
Yeah.
And then you want to create a wall, and then you want to create a moat, and then you can make outside investments. The wall is your emergency defense liquidity. The moat are investments you make that are going to make you money, but they're liquid. And then you can make outside investments. Outside investments also need to make sure that they follow in alignment with your vision.
So talk to me about the outside investments. So just so everybody understands, like, what do you explain some of those? Give examples of those.
All right, example. Let's just say I have a client that says, "Hey, Claudio, I'm 42 years old. I want to retire when I'm 50. Okay. And I need $50,000 a month to retire. My business is probably going to sell for $10 million. But in the meantime, I want to build up other assets. So I'm going to say, hey, do we have the wall? Do we have the moat? Yes, we have the wall. Yes, we have the moat. Okay, cool. Why don't we go look at some real estate assets? Let's go buy some multifamily investments. Let's go get some private equity investments. Let's go invest in other types of alternatives that are going to be heavily focused on cash flow, not heavily focused on appreciation." Why?
Why? Yeah.
Why? Your business is handling the appreciation for you. Okay. Your business is the piece of your portfolio that's going to grow and sell.
What do you say though to the person that, all right, let's just say this, right? I've got the agency in J&L. I've got appreciation opportunities there. I've got dealerships that I've bought, especially early on. There was all kinds of appreciation opportunities, or we wouldn't have bought them.
Mhm.
But I got one right. Well, I hate to say this publicly, but there's, I don't know how much more appreciation there is there. So let's say if someone's in that spot where they feel like the appreciation, this is, whether it's true or not, it's true if they believe it, right? I mean, in the sense that if they don't feel like they can grow it, whether it's this is the capacity, this is the best they can do, or they're not willing to grow it anymore. What if they need appreciation somewhere else? What do you say to that
It's
person?
incredibly unique, right? And then if that's the case, we can go find other places for appreciation. The problem
Okay.
is most of the time we're going to invest for appreciation, which is what we call equity or cash flow. Okay.
Yep.
And for most business owners, they're not as diversified as you, Scott. They've got one business, which is they're all in. It is their golden goose, and appreciation is still there. But hypothetically, let's say they're capped out. They're capped out either because they are or because they don't want to grow it anymore, right? Well, then all of a sudden, we're going to change how we treat that golden goose. We're going to actually move that golden goose out of the appreciation category. We're going to make that a cash flow category. And then we're going to use that cash flow to find other appreciating assets. And in which case, maybe the regular market, the regular stock market could be a good tool for them. The private equity markets could be a good tool for them. It really depends on the individual, but most of the time, that's not the case, right? Most of the time, an entrepreneur is growing their business. And if that's the case, everything else around them needs to be cash flow supportive.
I feel like true entrepreneurs, there are entrepreneurs out there that I would not, by definition, I'm not saying they're bad business people. But if let's just I'm going to just say this, right? I don't know necessarily by me owning a dealership makes me an entrepreneur. And I say that because that's what I'm saying. It's almost like there's a gray area there, right? I do no R&D. All right. I don't, I say this, and for someone that has to sell 2 car dealerships, but in the end, I'm a glorified sales team. The product supplied, hold on. The product supplied to me, right? I'm selling on the front end of the store. I'm selling on the back end of the store, right? I don't have to do any of the research from the consumer stuff. My job is to promote my store, set up the best client experiences I can set up, and the processes that will make that happen. And I go from there. And it's like, I don't even have to market and build a brand for my product. That's done by my manufacturer as well. Versus my agency, right, with J&L, that's true. I mean, that's 100% entrepreneur, starting from scratch. I got to do all the R&D. I got to build the products. I got to create the packages, the programs, the whole thing, the whole selling process. There's nobody doing anything for you. That, to me, that's more of a real, I put that type of person in the real entrepreneur. Not to say that there are plenty of car dealers that are big time successful business people.
Yeah.
And I have
entrepreneurs, it's a brain. It's a human type.
Well, where I was going with this is to your point on the appreciation. Rarely does someone sit there and say, all right, that's it. That person, once they hit that point, they're looking for the next thing to start. And it's almost like, well, there's your new appreciation, which is your own, another business you're kind of getting involved in.
That's actually such a good point because we've had the pleasure of selling a lot of businesses in my career. Like not my business, but like clients sell their business. And there's this like fake mentality. I even fall into it myself. Like when I sell my business, I'm then going to relax. Once I, have my liquidity event, I'm then going to chill. Yeah, and definitely. There's almost like a post-transaction depression that occurs most of the time when a business owner sells and they don't have another project to start.
Yeah. For the true entrepreneur. Yes.
And I've now have become a therapist almost with some clients because, this guy, I have to become I have a couple of clients in the middle of a transaction right now and they have no projects on the other side. And I'm like, hey, what's next for you?
Well,
I'm going to travel for 6 months. I'm like, dude, you're 44 years old. You're going to go crazy. Your wife is going to kick you out of the house.
Well, I'm taking mine to Italy for 6 weeks. We're going to be in Italy for 6 weeks. I'd invite you if you didn't have a newborn.
I'm a citizen in Italy, so I could probably get you in.
I'm already in. I'm going. I'll be there I'll be there 6 weeks starting May. What? Let me ask you this question. First off, let's hop over here to Randy. He's got a question I put up on the screen. And by the way, we're streaming live to Facebook, YouTube, X, LinkedIn. So if you've got questions, we don't get every question coming through StreamYard. Depends on which channel you're in, but obviously we're getting Facebook ones. So, how do you feel about buying ranch land in Texas for an investment?
Man, I'm not like well educated enough to be like, oh, great idea. But if you want a ranch in Texas and you can afford it, I think it may be a not bad idea. The prepper in me, right, thinks it's a great idea because I'm always ready for the world to come to an end. I do not have 6 months worth of food stored in my basement, right?
Yeah.
But most of the time, land is not a bad idea, especially if you're a business owner and that land comes with buildings on it. There's probably a massive tax play via a cost segregation study that you can do to create depreciation, which will help offset income taxes in the business. So there's so much, Randy, that goes into that question. But at its initial impression, I'm never buying land is never a bad idea.
Getting back to your, when you were sitting there saying what's next when someone sells an appreciating asset at their business, right? For me, because I just exited one of the stores, one of the dealerships, right? And it was about, well, this dealership was returning me this percentage on my money. Well, I got to find somewhere to put that money that was going to return me the same percentage or more, or I'm going backwards.
Man, that is so true. That is so true. And that's like, most people don't think about the other side of this, right? Like it's almost like there's an end to life once you sell the business, and people think, oh, once I sell my business, I'm going to start a new chapter. Well, in this new chapter, you still need cash flow, right? And it's such a unique conversation, and thankfully, our clients go into the transaction knowing what the game plan is on the next side. But all too often I get calls. I go, hey, I just sold my business. I have $3 million. What should I do? Unfortunately, most of the time that call is like, hey, I just sold my business. I got $3 million. It's definitely not enough for me to retire. Like, what do I do now? It's almost like this, like, oh shit, what do I do now?
That's right.
And the reality is that if you're truly thinking about selling your business, you need to have this type of a thought, like, hey, how much money do I really need to live the life that I want to live? Because most of the time what you were selling your business for is not enough to drive the cash flow that you're currently getting out of the business.
I've always, and I think self-awareness is very important when someone gets to this stage. And here's what I mean by that. You could be very good at, like, you could be that turnaround expert guy, right? I can go into a business, turn it around like that. I can tell you when when we bought the dealerships. I remember meeting with Honda, and the zone manager at the time says, well, this store is one of our top performing stores in this market area or whatever. And I was thinking to myself, well, buddy, you and I have a different definition of top performing, because we wouldn't be, if it was a top performing, we wouldn't be buying it. We see it underperform. That's what I'm thinking. I wasn't going to say it.
The bad ones, we should get those too.
Yeah, I want the underperforming ones. So, but my point is, we had the right person and partner in the day-to-day.
Yeah. That
it's not a 1-2 year thing, right? He went in within 2 months. It's instant, the turnaround. And so what I mean by the self-awareness, you go through different stages in your life. The person I am today is not the person I was 20, 30 years ago. So could I have gone into businesses 20 years ago and been all about turning them around and willing to do what it takes to turn them around all day long? Am I that guy today? Oh, I know how, but I better have a right-hand person with me that's willing to do it, because I'm just at a different stage in my life.
You nailed it. You nailed it. Most business owners, and again, we're not just dogging on business owners because I love them, but most business owners are so in the trenches. Rarely do they pick their heads up. And even when they do, what they see is biased. So they need people that are going to quarterback for them. They need people that are experts that can come in, bring everything together, and organize everything so that they don't have to take time out of their day. They can just continue running the business. And then they have people like us, people like you, that can say, hey, landscape, we got to do this, this, this. We got to aggregate all these things together to make sure that you're getting the most efficiency. And it's like, if you want to go fast, go alone. But if you want to go far, go together, right? Like, and that's the whole thing about the entrepreneur brain. And that's why I love working with them, is the entrepreneur brain gets that.
Yeah.
Your good old business operator, they may not, but the entrepreneur brain gets that. And they're okay hiring experts because they know they're going to get to the next level. And frankly, man, that's why we pivoted the business to what it is today, is I wanted to be in that position. And frankly, the reason is because I had a liquidity event. I had a major liquidity event in 2016, but I didn't have this help. And it cost me a lot of money. I paid a ton of dumb tax in that process that I didn't have to. So now I'm incredibly passionate about being in that seat, helping people make a difference, because I truly believe that the work we do, although like we're not feeding kids in Africa, we're not like building orphanages, but the work we do truly makes a difference in people's lives. And it makes a difference in people's employees and their lives. I just think it's an incredible position to be in, and I love it because of that.
So let's talk a little bit about, like, succession planning. First off, I don't think a lot of people think about it. So let's say, until is it safe to say that when it comes to succession planning, I'm not talking about just a clean exit. I want to retire. I want to do less. I need someone else to come in and really operate this thing, is what I'm talking about. Is it safe to say that some people also don't think about that and plan for that? Maybe they do that a little too late as well, just like what you were saying about the taxes.
Yeah, for sure. Here's the thing. Everybody's going to exit their business one day. Whether it goes according to your plan or not is totally up to you. And all too often, it is too late to come up with a game plan. Now, the beauty is, in what I work with every client towards, and if you're listening to this, take this to heart, hopefully, you should always build your business to sell. There is not a negative impact to building your business to sell. There's not a single negative consequence of doing it.
If every day it's set to sell, all it means is you're doing everything in your power to make it optimized. And by the way, if you're doing that, when that day comes,
it's your call.
It's a lot of work to sell a business.
All
of it's already in place.
I tell people all the time, if you are building your business to sell, you're doing one big thing. Okay? Building a business to sell is a true ego check. Because when a business is ready to sell, that means that the owner is completely obsolete. And like, if I look at it today, right? Like, I was gone at the business all last week because of the newborn Weller, and I got back this week.
I love his name.
Yeah, it's awesome. Dude, he's gonna crush in college. I got back this week and I was like, hey guys, what's going on? Like, I'm like getting in the trenches. Like, how can I help? And they're like, it's good. We're good. I'm like, well, what do you mean you're good? And they're like, yeah, no, like everything's handled. And I was like, oh. And it was almost like, oh, you don't need me? Like, I'm the guy, So like, building a business to sell is an ego check, but it's the right thing to do, because you're building a business that can operate without you. Because every single one of my business owner clients, all of them, are building a business for two reasons: more money and more time. No matter what other reason that is, it always comes back to more money, more time. And if you build a business to sell, you get more money, and more time.
You know what? It's interesting. I think if you think about entrepreneurs, I think there's a very high failure rate. All right.
No,
Um,
no, 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 no. Mm-mm.
no. Well, here, let me clarify.
There's a
Let,
very
let
high
me.
quitting rate,
A what?
a really high quitter rate, not a high failure rate.
Whatever you want to call it. But there's even a smaller super success rate, right? So you've got the people who quit or did not make it, right? And you've got the people who made it really big. But most entrepreneurs live in that wedge in the middle,
Yeah.
right? Where all of a sudden, to your point, they don't have the time. It's just like any other job. They are grinding, grinding. Um, and they flatline over several years. They're just living in this zone of, I don't want to lose what I have. I've been doing this long enough. It's not like I can just easily go out and get a job anymore, whatever. That mindset's not there anymore, right? So they live in that wedge in the middle, and it's more about survival mode and stuff. And to your point, if you're always building your business and growing it and setting it up to sell, whether you are or not, we're not saying you got to have the mentality of like, I can't wait to sell this business. What you're saying is, by having a mentality of where it's always in a position to sell, if you're truly optimizing the value, well, one way to optimize the value is where it's not reliant on you as the owner. So I could do webinars on this part. This is, let me tell you, this is the one thing. If you asked me, my number one superhero skill set as a business owner,
Negligence.
no, it is finding. That's why I get so frustrated when I talk to other business. Oh, I don't have time to do this. I don't have time to do that. And I'm like, I got 3 stores. I had 2 stores now. I got J&L. I got Me Plus Ultra. I got a real estate project. And I'm like, how do I got time.
Here's the thing. It's just once you fall into the trap of, and this is a really easy trap to fall into. Once you fall into the trap of mistaking or believing the urgent over the important, right? That's trap number 1. If you're consistently putting out fires, you have believed the message of the urgent versus the message of the important. So you're not clearly identifying what is the most important thing you should be doing every single day and doing that thing first, no matter what happens. Okay. That's 1. 2, you also believe this, and every business owner has said this to themselves. It's actually easier for me to do it than for me to explain to you how to do it.
Yeah. Oh yeah.
Right.
That's when you have the wrong people. That's when you have the wrong people. When all of a sudden you just dread. Yes.
Not always, but like sometimes
the wrong person in the spot, or you haven't done your job in getting them. You haven't done a good enough job elevating and delegating and elevating them up to where they can handle it.
Right. But that's my point. Like once you get into that trap where it's like you say it enough to where now all of a sudden you are doing all the jobs because it is easier for you to do it than to explain it. But you wake up one day and you built this amazing prison of a job that, you can't get out of. And look, it's a lot easier said than done. But what it requires is also something that I believe is a big mistake. And I talked about this in one of my reels on Instagram not too long ago. All too often, you have an entrepreneur hit some success and their business is doing well and you got good cash flow. And instead of taking that cash flow and recreating yourself, they get their car, they get that dream car they want, they put it on the business. They get the boat, they put it on the business. All of a sudden, the business becomes a piggy bank for their lifestyle, and it's no longer a business. Now it's just a financier of your lifestyle.
Yeah.
And if you don't wake up every day and go grind it, you're not going to be able to keep paying for your lifestyle. You don't have a business, my friend. You have a really well-paid job. but that's a mistake. And I talk about this with people all the time. Like when you have the free cash flow, double down, don't send it out, right? Reinvest. And we were talking about this in the beginning, reinvest. Like, how do you hire more of you?
Growth can be expensive.
Yeah.
Yeah.
And like this year, I'll give you guys an example. In my industry, it's incredibly difficult to replicate. Okay. Especially me, good looking, young,
Yeah, I can
successful.
see that. I can see that. How old
Humble,
are you? How
very,
old are
very
you?
humble. Can you not
How
tell? 22.
how
Uh,
old?
I'm actually 38, believe it or not. I know it's hard to believe that I look that young. Um, but in our industry, it's actually really hard to replicate because you require a pretty unique skill set in financial metrics, but you also have you have to be able to go get clients, right? And it's been 4 years of me hiring, developing, and the risk is sometimes we develop people and they go, "Hey, I can go do this myself. I don't need to do it with you,"
Yep.
right? You lose good talent, but that's just a risk we have to take. And that's a risk I'm happy to take because if someone's better off because they're part of my organization, then great. But now we have 8 people. We have 8 consultants in our organization, and this is the first year where 2 of our consultants are out producing me. And at first, you get like, oh man, like you get this like, oh, I got to, my ego hurts. But then I'm like, oh no, wait, this is working.
What can I do to work with one of them?
Well, man, in all reality, you might be after today. Because I want to go to Italy for 6 weeks. You know what I'm saying? But no, I got Scott to deal with.
I want to go over there because I want to feel like Trish and I went over there 2 years ago, and for the first time, I'd always made up excuses, and I gave the "I don't have enough time" excuse, and then finally did it. I want to have enough time to where I don't feel like I'm always having to do something every minute. I want to feel like I lived. I want to have moments where I feel like I live there and experience it that way.
What cities are you hitting?
We start in Venice. We go down to, and I might have some of this wrong, but we're kind of making a U. So we go Venice. We're going down to Tuscany.
Florence.
Then we're going to Florence, Rome, Amalfi, Capri, Sicily, Milan, Lake Como.
Cool. I've done that trip. It's epic. After this, I got a bunch of restaurant recommendations for you.
Nice.
Yeah.
Thank you. Yeah, we need them. Listen, I'm not kidding. I do have in Tuscany and in Florence, because we did houses, we do have space.
I'm gonna be in France. Are you there in May?
Very end of May, all of June. So if you want to shoot down, and guess who's going to be joining us in Tuscany?
Who?
Overlapping. So they're not all there at the exact same time because we got a big enough house there. So we've got Steve will be there at the beginning of Tuscany.
Oh, man, I'm in.
Then Sandy Cerami's coming in, and Mary.
Yeah.
Then Dave and Kathy are coming in. All right. Jeez. And then so at the very end of the Tuscany part,
Me Plus Ultra in Italy this summer. Is that what this is?
It's like, this is what we do at Me Plus Ultra. All right. This is what we do. We work hard, but we play hard. And so we have an open bedroom at the end of Tuscany. And then Florence, it's a kick-ass place. You might want to come to that one.
So when you're in Florence, you got to go to the rooftop at the Westin. It's a really cool rooftop bar, and it overlooks the whole city. On one side, you've got the river. The other side, you got the Duomo, and it's super cool, man. We're in Saint Tropez for about 10 days. I think it's like June 6th through the 16th, and then we go up to Paris for a week.
And by the way, everyone hears us talking about travel and this and that, but you'll be working. Oh, yeah. I'll be working. We'll be answering texts. We'll be making calls. I'll be on Zooms. So it's like, that's the one thing I think people think, oh, I'm gonna make it as an entrepreneur one day,
No.
but it never. The balance is you just
But
do it
that's
all. There is no, for me, there's no weekends,
yeah.
right? There's no weekday and weekends. All my days are the same. I don't. If I want to have fun on a Monday, I have fun on a Monday. But but I'm always also working on Saturdays and Sundays. So it's like
No, you're not. No, you're not. No, you're not. But you're not.
I didn't say I was grinding. I said I was working.
No, but in all reality, though, like I do like going over there because we're 6 to 7 hours ahead, right? So I can have breakfast, lunch
That's right.
around 1 o'clock. The market's opens. I get a couple hours. I break. I have dinner, and then I work till about midnight.
Yeah.
1 a.m. While the family and the kids are asleep. So like I get to buy some time while they're sleeping because I just I don't need a whole lot of sleep. So it works really, really well. And it's just a really efficient way for you to get work done without missing out on time. And that's one of the reasons I got my Italian citizenship is I do plan on moving to Europe for a significant period of time to get my kids acclimated to different cultures. So, for what it's worth, like that's another topic that I'm super passionate about and something that I think through very, very.
You have a whole lifestyle brand as well, don't you?
Mm-hmm. Yeah. Yeah. But here's the thing, like I'm obsessed with time. I'm obsessed with how time operates. I'm obsessed with how you can invest time. And I'm incredibly intentional about how I measure and spend time because I think time will compound much like money will. I know time compounds much like money will. And I know if you invest it correctly, it will pay incredible dividends where I think most business owners feel like they have to be on 24/7, right?
Mm-hmm.
And the reason that is because they've built the business that way. And Scott,
There gets a point, Claudio, when it's time for them to step back. I think some go through a little guilt.
without a doubt. But and you can probably attest to this. I was going to say is I don't always get back to you right away, but I always get back to you.
Yeah. Yeah.
And that's
if it's important, you get back to me right away. Like if all of a sudden it's like I need it, and I think maybe it's happened one time in 4 years, I'll be like, hey, I need you, call me back ASAP.
Yeah.
I send a different type of message.
Right. But like this is the reply that I send people all the time. Is this important or urgent?
That's right.
I send it all the time because if it's urgent, I will drop what I'm doing. I'm going to call you.
Yeah.
But most of the time, 99 of 100 times, it's not urgent.
That's right.
And that one simple text message will change your game because just understanding how you can time block, like, hey, is this something that you need me right now or can I call you back? Right. That's awesome. I saw Jamil's message. Well, Jamil, somebody has to work, man. Like, come on. Like, how are we going to pay for all of our fun if you're not working?
Jamil is the one that coined the phrase SJ 24/7 because of my work ethic.
Yeah. You're off 24/7.
No, it's
Look,
nonstop.
Jamil, you work hard enough and you really, truly, truly grind and you give it your all this year, Scott can go on vacation again next year and it'll be totally worth it. But just to kind of get back to kind of some of the strategy piece, I know a lot of people are probably here. They're like, oh, thanks guys for the vacation talk. But like,
well, we got to have a little fun, Claudio. I mean,
but that's like why I love doing what I'm doing just on the taxes alone, right? Like if you're paying 35% and we get you down to 20%, 15%,
correct,
on $1 million, it's $150,000, right? What else can you do with that kind of a money? Like you can probably hire a couple of people. You can hire one really badass person. You can take some of it, buy a building with it. Like I just truly think that the impact is so tremendous. And that's just 1 year. Now imagine we do this 4 or 5 years in a row. Like Scott,
so you're on to something right there,
Yeah.
right? Okay.
Yeah.
So, and this kind of leads into something I wanted to ask you. Like, what are some of the misconceptions, or really, let's see if most people are in like that you and I might appeal to, right? Or within our network or in growth mode. Let's talk about wealth accumulation. So what you're saying is people may not see, to your point, saving $150,000 a year in taxes. While that's great, that doesn't mean I'm accumulating wealth unless you start doing what you just said. Now all of a sudden I can invest it here. I can do this. I can do that. Let's go there. Talk to us about that.
So when we get involved with a business owner and we look at what their numbers are looking like, we look at their financials, right? Inevitably, they're already spending money in places that create tax benefit. And that's just kind of part of how this happens, right? So we know that there's going to be some tax savings involved. And then we create a plan around how we can take those tax savings to double down their business. So that's why I say those three things, is because I don't just want to look at the tax savings. I want to look at how do we reinvest those savings into growing your business. And then when we grow the business, we have a bigger tax bill next year, which means a bigger tax savings, which means bigger. And this thing just is going to snowball over time. And let me just give you one quick example, right? Like real estate. Let's just talk about real estate for a minute.
Yep.
If you own the property in which you operate out of, you can depreciate this property very aggressively. And most of the time, the down payment required for this purchase is less than what you would ordinarily pay the IRS. So you can almost choose to pay taxes or buy a home office for your business. Literally 8 out of 10 times, it's truly just that. It's but you just got to know the rules. You got to know what to do. You got to know how to do it. And if done correctly, now you own a piece of property that's only going to appreciate most of the time, right? And when you sell the business, if you sell the business, you keep the piece of property on a 10-year lease to the new owner of the business. Now you've got cash flow. There's so many different ways we can go about this to do it and really make a difference in your wealth accumulation.
We're getting ready to move J&L. Jamil's watching. First off, Jamil said his goal this year is to have J&L grow enough to where I do a 5 months in Italy next year. but we're sitting there. He's thinking, I told Scott we should be buying. I told Scott we should be buying. So that's probably what he's thinking in his head.
I mean, look, you've been a beneficiary of some of these tax strategies, right? And you know exactly what we're talking about, how we do it and where we do it. But unfortunately, most people just don't know it exists. And just because you don't know it exists and now you're learning about it does not make it risky or aggressive, right? Do not correlate the two.
What advice do you have? Because you've put a lot of emphasis on reinvesting back into your business, right? If you're a business owner, what's the balancing act for someone that needs to do that and at the same time secure their own personal finance? Because there's a difference. I got me personally, and then I've got the business, right? What's that balance look like?
Well, let's talk about that, right? Because the reality is, again, in general, most business owners, their business is the wealth engine that it's going to feed their goals personally. Okay. Most of the time, their business goals and their personal goals are not aligned, which means that you've got a wealth engine that is not optimized to deliver the output that you're looking for. And I know that's kind of like woo-woo talk, but it really makes a difference. But let me give you an example tactically of what this looks like. Okay. If you're telling me you want to spend 5 months in Italy next year, right? But all joking aside, you're telling me you want to have more time, but your business goals, right, are to grow 30%. Tactically, we need to grow 30% with you doing less. Okay? I know that sounds normal, but most people have not gotten to that step, right? Step 1 is goals. Step 2 is tactically. Step 3 is execution. So if tactically we need to grow by 30% by doing less, what do we need to spend money on to make that happen? So that's the first piece. Assuming we got that there, then the balance becomes cash flow. If the business is self-sustaining, it's reinvesting, it's growing, and putting more money in will have a diminishing return, which means you're not going to make as much money as you possibly can. Then the very next step, Scott, is let's recreate your cash flow outside. Let me tell you what that means tactically. If you need 25,000 a month to live, the business is paying you 25,000 a month. Let's go make investments outside of the business to replace that 25,000. That's step one. So we look at appreciation and cash flow. And again, sorry to harp on real estate, but let's just pick on real estate. You buy a piece of property, it's leased, you've got the appreciation of the property, and you have cash flow. And let's do that until we've replaced the 25,000 outside the business. And now you've got the business cash flow and the outside cash flow. Once we're there, then we can double down on riskier, more heavier bets, such as private equity, such as venture capital, other types of assets, right? That are going to have big wins, not necessarily just cash flow. So that's the approach that we take. So like a lot of times we'll do short-term debt, bridge notes, that sort of stuff that's going to help recreate cash flow on the personal basis, because the business is going to ebb and flow, right? You're going to have good years, you're going to have bad years. And during the bad years, I want you to be able to go, hey, I don't need income from the business. You guys keep it. I have enough income coming in personally. So the business has the best chance of survival and the best chance of growth through downtimes.
You said something, go back to the goal setting. I'm actually going to, I was writing while you were talking, I was taking notes because I'm going to do a podcast on it. Actually, you always hear about work-life balance and all that crap. And if you're a business owner, an entrepreneur, or let's say you're running a small, the only way you're going to have work-life balance is if your personal goals and your professional or work or business goals align. And what I mean by that is you brought up a good example. I wanted to be able to travel this and that, but professionally I got to work here, here, here. Well, if you're all in on the business, right? And the business relies on you solely to make it drive, you got goals that are not in alignment. And you're going to feel that stress, and it's just going to make it's going to make you hate what you're doing, or hate your personal life because you couldn't do the travel that you wanted to do, right? You've got to find an alignment that supports both. And when that happens, I tell this to people all the time. I've never been, and this has only happened to me in the last 2 or 3 years. I've never been busier than I am right now. And I know people laugh at that, but it doesn't feel like it doesn't feel like I'm working. And it's because my personal goals and my business goals, they're just aligned. They're not, there's no there's no conflicting goals. There's no, it all works together. And it starts for me with a personal mission statement, and if I have anything in my business or personal life doesn't align with that, I've gotten better at saying no to those things. Right. And I just focus on that. And quite honestly, the better my personal life is, the better my business goes, and the better my business is, the better my personal life is.
So that's a good point. No, you said something about saying no. No is the most powerful growth engine in your business. And I tell people this all the time. I'm working with a different company right now.
Jamil's gotten good at telling me no.
but in all reality, like, business is a zero-sum game. And what to me is, by saying yes to being here, I'm saying no to something else that I could have been doing in this hour. Right.
That's right. Yeah.
And most of the time we say yes to the wrong things, and inevitably we're saying no to the right things. So I've identified in my world and in my business exactly what my yeses are. And if you are not 100% my yes, you are 100% my no. So if you are not the ideal client for our organization, although I'm going to do everything I can to help you, you're not going to become a client. Because if I say yes to you as the wrong client, I am saying no to the right client. And I'm working with as a consultant with another construction company, and they're saying yes to everything that comes through the door.
Mm-mm.
And they're 2 years in, and they cannot figure out why they can't grow. And I looked at their numbers, and they're 45 to 50% of their yeses are 10% margins or less. And I said, guys, you can't grow because you are taking all the profits out of the right jobs to pay for the wrong jobs.
Yeah.
And most of the time, that is the difference between getting someone out of stage one, which, listen, for everything we've been saying today is all about stage two growth businesses, not stage one growing startups. That is the biggest difference between getting somebody out of a startup mode, because you can be in stage one startup for 10 years, or you can get into stage two growth in 6 months. It's totally up to you, but it comes down to the decisions you make inside of your business. But getting you out of
Define for everybody listen, define real quick stage 1 and stage 2.
stage one is startup. Stage one is I've started my business, and I am not at a point yet where the business has roots. That's stage one, right? Stage one is I could probably go out of business in 90 days. Stage two is foundations there. I've got the right key hires. I've got revenue generating strategy. Like I've got people that can continue to sustain the business, and I can focus on growth, right? Stage three is more plateau. Like we're not really focused on growth. We're just focused on sustaining. But to move from stage one to stage two, you got to identify who your right client is and who your wrong client is. And once you identify who the right client is and who the wrong client is, you say no to the wrong clients and you only say yes to the right clients. And that is the scariest business move you can make, because when you're making that transition and you're saying no to somebody, but you don't have someone to say yes to yet, right? That is terrifying.
Yeah, that goes even as it trickles down through the business. That same advice, right? For example, we've got a Me Plus Ultra member was in the hot seat 2 weeks, either last week or 2 weeks ago, 2 weeks ago maybe. And the business is all on her, right? And she's scaling now. She's growing it and scaling it. Well, at some point, that person has got to be able to tell clients without sacrificing the quality and the support they get. They've got to understand that they can't be the one that manages every client interaction, all the communication. I know Jamil had to go through it at some stage, and eventually, you've got to be able to say, you've got to say, no, I can't do that. John or Mary over here can do that for you. And I'm a phone call away if I need to step in. But at some point, you got to be able to tell no, that I'm not going to be the one working on your account. I'm not. So I think you get the business, but that same piece of advice goes all the way through.
Yep. Without a doubt. And that's scaling. Like,
so give us a couple, give me a story, an example where strategic tax planning made a huge impact on one of your clients, their wealth.
oh man, how do I pick? I mean, all of them.
Listen, we don't. I just wish that you could say it for me, but no.
But like at the end of the day, like here's the reality, right? I'm trying to think of.
You don't have to give a specific. Obviously, don't give a specific name. Give a situation.
Yeah, no, like I've got a client that's in construction. Let's just kind of go there. I've got a client that's in construction, and the hardest part about construction is if the money is not managed properly, you kind of build yourself into like a Ponzi scheme, like not illegally, but like you were literally taking deposits from jobs to finance new jobs.
Yeah.
Right. And what happens at the end of the year is you show this huge profit, but you actually don't have any of the money because all of that profit is already out in the streets and new jobs. That's overgrowth, right? It's uncontrollable growth and eventually will blow up. So we have a client doing about $18 million in sales, amazing profit, like 4 million in profit, but he's in major growth mode, doing it very correctly.
You can grow yourself into bankruptcy.
Yeah, but not this guy. This guy's doing it right. He's doing it right. But on $4 million in profit, he owed almost $1 million in taxes, right? 1.3 million before I got involved. And he didn't have the money because, he was just putting it in the new projects because he was prepared to do 28 million the next year. We got involved and we got that $1.3 million tax bill down to about 220,000. So we literally moved the needle from him having to get on a payment plan and borrow money to pay his taxes to him being free and clear. And now, from a financials perspective, we're able to say, hey, Mr. and Mrs. Bank, 2024, it's February, it's already done. Here are the financials. We need a line of credit for $2 million. Done, right? Now, he doesn't have to use his own capital to finance projects. He's got the line of credit to finance projects so he can actually pull money out of the business. Because this guy is making $4 million on paper, but living on $200,000 a year because he's just robbing Peter to pay Paul. So that's a kind of one type of example. I have another client who
That's a good one.
Sold his business, and this guy is incredibly charitable, and he sold his business for about $35 million, and he doesn't need the money. He wanted to give it all away. But because of our wonderful IRS rules, he was going to have to pay 30% in taxes, even if he was going to give it all away. So we got involved and we were able to eliminate the entire tax liability. Now, I'm talking about almost $10 million in taxes, completely eliminated. And now we put the money to work, and $35 million over the next 10 years is going to deliver almost over $100 million in impact to the charities that he's involved in.
That's awesome.
Just makes a big difference, right?
Yeah. So for the people that are out there, if they could take one actionable step today from today's conversation, right? What should it be to start optimizing their wealth?
Man, one thing. Hire a quarterback. Yeah. Get somebody that can communicate the people together. CPA, attorney, financial advisor, insurance agent, banker. Get somebody who can be in the center of those relationships that understand your business so that you don't have to. That would be the number one thing that will impact your wealth, is because when everyone speaks the same language, moves in the same direction, and gets incredibly efficient, you can then simply focus on growing the business and running the business. Then the rest's key. But if I had to give you two pieces of advice, is to pay Uncle Sam less taxes.
Legally.
And if you don't want to hire a strategist, you should try tax fraud. It works most of the time for a little bit until you get caught,
Yeah. And then you get free room and board.
Yeah, absolutely. Pickleball on Sundays.
That's right. All right. So what's the best way for people to reach you?
My email, claudio@gfgsolutions.com. Okay. You can actually text me if you want, 407-538-0774. That's my cell phone. If you have questions, I'm happy to answer. If you couldn't tell, I truly love what I do, and I really want to make an impact. I tell people all the time, if I can solve a problem relatively quickly, I'm not here to just, sell my services. I'm here to make an impact, because the word will spread and the good will happen. So feel free to text me, feel free to email me, or check out my Instagram, which is @Claude Gambin. Everything we do are on reels and strategies. Everything is already on Instagram.
And just so you know, I've been, if you look down at the scrolling at the bottom, I've got your website up there, so that I'm sure they can reach out to you there as well. But one thing that we didn't really touch on, and that is, and I want to thank you first off, thank everybody for tuning in, and then thank you for sharing all these incredible insights with us. But one of the things, Claudio, I think that really separates you from a lot of the other people is you're a true entrepreneur yourself. It's almost like, let's take the dentist industry, right? Most dentists are good at teeth, but they run a business, and I would say 10% are good at the business part.
Right.
Is that so? I would say very similar to that. Same can be said a little bit about your industry as well. Whereas there's a lot of people that might be good at, whether it's saving taxes or maybe they got some answers on the different things that the different verticals within wealth, right?
Right.
But you understand the entrepreneurial mindset and what it takes to actually grow a business. So, which I think is a big advantage for you.
Man, it's been the biggest blessing in my life. Well, the biggest blessing in my professional life. I get to interview business owners every day for a living, right? Like, and most of the time, 99% of the time, what I am delivering to you as lessons, I have learned from a client. So there's hardly a problem that I come across that I haven't seen somebody solve in one way or another. And over my career, I've interviewed over 15,000 business owners. And when I make interview, like intimate, in-depth interview, understanding their life, their business, everything across every industry. And truly, that has become our superpower. There's not really an issue that I don't have either the ability to solve or the Rolodex to find a solution for.
That's right.
Yeah. And because of the collective, that's why we're impactful.
You said something very powerful right there. The Rolodex to get the answer. And I haven't filled you in yet on exactly what my new thing is, but
I don't want to know because you won't tell me, and you've just been hanging it over my head. I can't
tell you yet. It's
and
big.
When you find out, I don't want to invest in
it. You will.
I don't.
Well, I know this. You're going to want to manage what comes from it. I can tell you that. You're going to want to do that. And so, but 5 years ago, this would have been an idea. I said, somebody should invent this. And now I got the Rolodex. I got the network.
You know what's really
funny?
This is easy. Funny? Hold on.
Some of that's from yours.
Why do you have the Rolodex? Whose Rolodex is that? No.
I tell people.
Whose Rolodex?
Well, that's how it works, Claudio. That's how it works.
I'm not allowed to know.
So, yeah, I can tell you. I can tell you. I just got to get it. I will be able to tell you on Monday night.
Perfect.
And I'm expecting. And we'll do it over the Weller, over the nice poor Weller.
Perfect.
All right.
Perfect.
All right, everybody. I want to thank everybody for tuning in. Thank you, Claudio.
Rolodex that now you're just.
I tell people, listen, when you come in with me, it isn't just me. It's my Rolodex expands. It's no different. I expect the same in return from you. All right. So, that's how it works.
Yep. All right, cool.
1 + 1 equals 3.
Being kicked out of the club is my favorite thing.
You're never going to be kicked out. You're my horse, even if we never win a race, Claudio. All right.
Okay.
All right.
Nicest thing you've ever said to me.
Thank you, everybody, for tuning in. Another episode on Me Plus Ultra Network. Make sure you visit meplusultra.com and Me Plus Ultra Network on YouTube. Subscribe to both, so that way you never miss another episode. You miss a lot of good stuff here Claudio brought to the table, especially some of those stories at the end. I thought they gave really good examples of the power of what you can bring to the table. And really, it opens up a lot of different possibilities for people and opportunities. So I want to thank you for that. Once again, reach out to Claudio if you can. Reach out to me if you want. Until then, cheers, everyone. We'll see you soon.
See you guys.